What was the most anticipated IPO of 2020? Airbnb, of course. This company has forever changed the tourism industry. Some say for the better, some say for the worse. Airbnb has had a whirlwind year as the coronavirus pandemic has slowed down or stopped most businesses, particularly those in the tourism sector. But the stock market has rebounded despite all that, which presented an opportunity for Airbnb to go public finally. Now, you might be wondering how to buy an Airbnb stock, or should you even buy it at all? Let's find out. Welcome back to Studio Invest. My name is Joy, and in today's video, we're going to break down the pros and cons of investing in Airbnb stock. To answer that question, we'll first determine where Airbnb stands in today's economy. After that, we should figure out what the right time is for us to get in on the action, fresh off the heels of its IPO, or if we're better off investing at a later date. We'll tell you everything you need to know about Airbnb, which will inform you about your investing strategy, regardless of your market timing. Since it's too early to analyze trends in its technical performance, we'll have to rely on fundamentals for this breakdown. Toward the end, I'll tell you how to buy Airbnb stock step by step, so keep watching. Let's first understand where Airbnb stands and how it makes money. A brief history of Airbnb. Airbnb was founded in 2008 by Brian Chesky, Nathan Blecharczyk, probably a Polish name, and Joe Gibbia. You know how they say necessity is the mother of all invention? Well, Airbnb is a shining example of this. At the time, Brian Chesky was just a broke designer, and he needed money to make money fast to afford his $1,200 a month San Francisco apartment. After noticing that hotels were sold out for a local design conference, he and Joe had the idea to offer attendees a cheap place to sleep and make some money while they're at it. They didn't even have proper beds, just inflatable ones, which is where the name came from. After experiencing the high of their first booking, they were hooked. With this proof of concept, the company secured funding from investors such as Y Combinator, Secure Capital, and University Venture, using that capital to aggressively expand and open international offices worldwide. Realizing that they could further disrupt the trillion-dollar global tourism industry, Airbnb broadened their offering beyond airbeds into full-on properties and tourist experiences. Since 2011, Airbnb started buying up location and payment-based companies left and right. A few notable examples are Akelio and Crashpadder, a German and London-based rival marketplace; Nabawise, a city guide; Conquer, a business expense reporter; Vamo, a city trip planner; Luxury Retreats, a premium vacation home marketplace, bought for an estimate of $200 to $300 million. Now, if I mispronounce any of those, correct me in the comments down below. Airbnb plans to compete with luxury hotels on two fronts. 1. Beyond by Airbnb, a listing of luxury vacation rentals. 2. A line of condos with hotel-like amenities such as a 24 hours concierge and valet parking. I hope I pronounced that right. With millions of guests and hundreds of thousands of properties listed, Airbnb seemed unstoppable. That is, until 2020 brought the Airbnb juggernaut to a grinding halt. We'll continue to explore the present and future threats to Airbnb later on, like COVID-1 or COVID-2 or COVID number 55. But first, how does Airbnb actually make money? It used to be when a rental company had to raise enough capital to buy or construct a property that they could then charge tenants to occupy. Well, not anymore. Airbnb is a part of a new breed of companies that exploit a concept called the sharing economy. In their case, this means that they don't create products to sell to consumers. Instead, they provide an online marketplace that connects people with properties, hosts, to people looking for short-term property, guests, through a simple user interface. This enables hosts to earn money from a property they are not using at all, or only partially using. It also allows guests to book often, cheaper, and at-home feeling rentals that give them an authentic local experience. This as opposed to booking more expensive, one-size-fits-all hotels. And even though both parties are transacting directly, Airbnb takes a percentage of every booking fee for the convenience they provide. Airbnb either charges a fee to both hosts 3% and guests 14.2%, or only charges hosts 14 to 16%. The latter option depends on whether the host is a hotel, the country they're listed in, and their cancellation policy. Strict costs more. Any company that disrupts a trillion-dollar industry is bound to receive criticism. The Airbnb effect refers to the impact, oftentimes unintended consequences, that Airbnb's radical business model has on the tourism industry and cities it operates in. These range from housing discrimination and fraudulent listings to increased housing prices. There are two sides to this debate. Some people think that instead of bashing Airbnb, hotels should discard their old business model and offer travel experiences that appeal to diverse lifestyles and tastes. But in all fairness, hotels do come with amenities such as restaurants and gyms, if you want to be as jacked as me, plus around-the-clock service general safety precautions, which are advantages that most short-term rentals cannot afford to implement. Others believe that Airbnb causes more harm than good, and that it should be disbanded or heavily regulated. Chief among these complaints is Airbnb's unintended effect on the average person's ability to afford housing. Airbnb's increased use and popularity incentivize some landlords to avoid long-term rentals together. Rather than charging a fixed rate for a given rental period, they can spice up their place and charge more for a steady supply of short-term stays. This causes other property owners to follow suit. And soon enough, housing units and entire neighborhoods are left unaffordable to the local citizens. This is one of the main drivers behind local governments regulating Airbnb. Airbnb's biggest threats, despite hotel associations lobbying to kill Airbnb since its inception, they have continued to succeed thus far. But given the Airbnb effect and COVID-19's surprise attack, Airbnb faces many threats to its continued success. Namely, copycat competitors. Hotels are finally starting to wise up, adapting their business model to more closely resemble that of Airbnb's. Hotels like the Redberry, Acker, and even Marriott are developing or are already offering an affordable stay in big cities, designing their rooms to feel more like homes and partnering with tourist experience companies. Short-term rental regulations. In 2015, San Francisco almost reduced the number of days landlords can rent out their properties to 75 days instead of 90. The proposal was ultimately rejected in their hometown. But the same doesn't hold true for other cities and countries. New York, for instance, has a minimal rental period of 30 days. Other cities like Chicago and Boston also increased regulations by policing rental frequency, requiring licenses, taxing short-term rentals, etc. All this to discourage too many residents from becoming hosts. Travel restriction. The COVID-19 pandemic brought the worldwide economy to a grinding halt. Unlike many of its fellow tech unicorns, Airbnb was hit really hard. Many tech giants only grew bigger because they mostly deal in software, which we've grown even more dependent on to connect with each other while maintaining social distance. Are you maintaining social distance? Airbnb, on the other hand, deals in physical goods, despite not owning any of it. As countries closed their borders, bookings were canceled, and many hosts were left on shortages. Some successful hosts even took on debt to buy more rental properties, with the expectation that Airbnb bookings would keep coming through. While the outbreak still isn't over, there has been progress in vaccine development. Hopefully, we find a vaccine. Borders do open. And we're allowed to travel again. But what if another pandemic strikes, like COVID-15 or 17, in the near future? Airbnb would have to downsize all over again, or worse. Airbnb had already planned to go public before the pandemic struck. And while on the surface, it doesn't seem ideal for them to IPO during the same year as a horrible pandemic occurs. There are two simple reasons why they probably decided to go through with it.
Oh, the money's gone. We need to make an IPO.
Hey, what are you doing? I'm still filming the video. Get out. God damn it. Cash reserves. Airbnb used to have policies that allowed hosts to charge for cancellation. But in response to the widespread cancellation of bookings due to the pandemic, Airbnb lifted this policy and let guests cancel their reservations for a full refund. This naturally pissed off hosts as they are stuck paying for their properties. To win back some brand trust, Airbnb announced that they would pay hosts whose bookings were canceled due to COVID-19 a quarter of their cancellation charge, which is better than nothing, but it still doesn't sit right with some. One of Airbnb's possible motivations behind their IPO was to safeguard themselves against history repeating itself, where people aren't able to travel and they can't make money from bookings. If they have enough cash laying around, they'll be able to weather any upcoming storm. Market dominance. Airbnb is in a unique position because unlike other sharing economy apps, such as Uber, it doesn't have a huge competitor yet. As mentioned earlier when we overviewed Airbnb's threats, the competition is closing in. The barrier to entry for creating an Airbnb clone is low. So, the best thing they have going on for them is network effects. Since their platform has the most listings and brand name recognition, new users will try them out first and existing users won't easily switch over because they already invested so much time personalizing their in-app experience. Airbnb can now pour their new IPO funds into creating more awareness, winning over more users, and recovering the numbers of bookings as soon as travel restrictions are lifted. What is Airbnb stock worth? Before the IPO, Airbnb was valued between $30 to $38 billion. As of today, Airbnb's market cap stands at about $100 billion. That officially makes Airbnb the most valuable player in the online travel industry by a huge margin, or as some people like to say, huge margin, surpassing the likes of Booking.com, which is currently valued at $80 to $85 billion. In an interesting pre-IPO move, Airbnb has split its stock shares in half, which also decreased the cost per share. It's speculated that Airbnb shareholders approved the split to encourage more retail investors to participate in the IPO. Apps like eToro even allow retail investors to buy fractional shares. Link in the description down below, by the way. The barrier to investing in Airbnb is as low as can be. Well, that strategy clearly paid off. On December 10th of 2020, the Airbnb stock opened at $68 per share. By the end of the day, Airbnb was up by 113%. Woo! Closing at $144 per share. That's a hat trick right there. Is Airbnb overvalued? There is an argument to be made that Airbnb isn't worth $100 billion. It comes down to these four simple reasons. Regulation. Airbnbs might soon be regulated to the degree that doesn't make short-term rentals worth it anymore. Competition. Hotels and other online travel agencies are catching on with a model that is easy to replicate. What else is going to retain customers beyond brand recognition? Security. Fraudulent Airbnb listings, property damage, scams, and more negative effects where security for guests and hosts can't be automated. If these incidents continue to happen, then the Airbnb brand might be tarnished. Diversification. Airbnb has diversified into many other travel-related services, but as the pandemic has shown, even travel is expendable. How will Airbnb survive without bookings? But if you're on the edge of whether you want to buy Airbnb stock or you think it's overvalued, there is another way you can cash in on Airbnb. You can become a host. So Simply as that. You run at your pace, get cash. There's a link down below. Well, should you buy ABNB stock? That's Airbnb, by the way. It's not usually recommended that retail investors jump onto a fresh stock. It's usually better to wait and see how a stock performs over the course of a few months so you can make your own informed decision about whether to go long or short it. Though the stock has overperformed by every measure, there's always the risk that investors will soon liquidate their positions to lock in those sweet, juicy profits. Don't you want that? I sure do. Airbnb is also in a difficult position right now, as it's not making the money it used to, due to reasons you already know. That shall not be named. They lost over $1 billion last year and $2 billion this year. At the same time, you could argue their temporarily weakened position also means that their stock is even underpriced. And who doesn't like a good bargain? Having a long-term vision of Airbnb as a tourism market leader is the only reason why you should buy the stock this soon. So that's it for today's video. Hopefully you learned something new about Airbnb and investing in stocks. Do you think Airbnb stock will continue to defy all expectations to the moon? Or will it plummet the minute that tourism takes a hit? Leave your comments below. I want to know what you think. And if you plan on opening a brokerage account, feel free to use our affiliate link in the description box to support this channel. Don't forget to caress that like button gently, subscribe, and hit the notification bell for even more in-depth stock investing content like this. I'm Joy. This has been from Studio Invest. I'm out. God damn, I can't shut it off. It doesn't work. Alright, whatever.
It's a wrap for today!
It's a wrap! Woo! Oh, please don't. Please don't.